What is happening, investors? It is your boy Jack, and we just got accepted into the YouTube Partners Program. And for those of you who don't know what that means that there is now ads on my videos. Essentially, it means that I am making money off of these videos. Money that I can then go ahead and invest into the stock market. I'm going to be getting paid to speak about how I'm making money. That seems like a pretty good deal to me, and I couldn't have done it without the support of you guys lately. It's been absolutely crazy. We're trying to get to 1500 subs by Monday, so if you're still one of the 85% of people watching these videos who isn't subscribed, just do me a favor, scroll down and hit that juicy red button. It's free. And while you're down there, feel free to drop the video a like and drop me a comment at the end of this video with your thoughts on what we're going to be speaking about today. Oil stocks. So unless you live under a rock, unless you're Patrick Star from SpongeBob, you know what happened with oil the last couple of days. We saw prices go negative. I'm not going to get into this too much because I made a whole video on this only yesterday. Check that out if you want to after this one. But oil prices went negative. Too much oil is being produced and there is simply not enough supply. You know, people aren't driving around as much in their cars, there's no planes flying all over the place, and there's definitely no cruises. The supply and demand is just not in equilibrium. What I want to speak about today is the actual oil stocks that I will be keeping a close eye on and I will potentially buy going forwards. I got a few questions in the last video asking me why these oil related stocks didn't all just go bankrupt overnight. It is simply because they are not the commodity that is oil themselves. They are businesses, they are companies. Look what's happened today so far. The market's not even been open half an hour and Exxon Mobil is up nearly 4%. The market is continuing to just do whatever it pleases. Boom, 4%. Look, let's just start it off with the big boy that is Exxon, because a lot of you probably know who these guys are. The first thing that needs to be known about Exxon and why so many people find them so attractive is their dividend, right? Right now they only have a dividend of 55. They're borderline safe. They have a dividend yield, however, of 8.13% and a dividend growth streak of 37 plus years. That's a very long time. If you know anything about dividend streaks, that's a long time, and they're going to want to keep that going. They're going to do everything they can to keep paying this dividend. And why we're going to start off with these guys, I like trading the biggest boys. They're the largest publicly traded petroleum and petrochemical enterprise in the world. We like trading the big boys, we like buying the big boys, not the little boys. They're too scary for us. And here's what they actually do. So they're in upstream, downstream and chemicals. So their upstream accounts for 50% of their earnings, and that's things like, you know, exploring for developing and producing oil and gas around the world. That's kind of what people think of when we think about oil related companies. Their downstream, which equates for 28% of their earnings, is their global network of manufacturing plants, refineries and transportation systems. So, you know, they don't just explore for oil, they don't just transport oil, they have their foot in a few different regions to do with oil. And then lastly, chemicals, 22% of earnings. They manufacture and market petrochemicals and a wide variety of specialty chemical products used in packaging materials, plastic bottles, vehicle parts, synthetic rubber, solvents, etc. So diversified company that is heavily involved in oil. Now, I have spoken about these guys quite a few times on the channel, and people's main concern is always if we go and have a look at their max or even their 5-year stock chart. We can see amazing growth for the longest time. But in fairness, for the last while it's been very stagnant, and for the last 5 years it's actually been showing a downtrend. But when we see a dip like this, we've dropped as low as $36. We're currently at $42. The last time we saw these numbers was about 17 years ago. It was a very long time ago. I'm happy to own a position in these guys, and I do honestly plan on buying more. Obviously the last 5 years are a little bit worrying. You know, there's been a downtrend in general. That happens sometimes. Let's go back to the Great Depression. You know what? We saw this big downtrend, and when we started to recover, it took a while. It might have took a little bit longer than other people, but it boomed up, you know what I mean? Nearly 50%, over 50%, 60, 70% in a matter of a few years, less than 5 years. And then since then, it's been a bit dreary, you know what I mean? It's been a tough kind of 6 or so years. Maybe it's time in the next year or so, who knows, for this next uptrend to come. But anyway, that's the first stock. I'm not going to be going into depth on them. We've 5 stocks to cover. I don't have time to do a full analysis. Next up, another company that I am indeed in, Chevron Corp. Their chart is a little bit nicer. You know, there's lots and lots of steady growth. Yeah, it has its down periods, but then it comes back up. It has its down periods, it comes back up. And now we're having this big, juicy, massive down period. And our expectation will be that at some stage or another, it's going to go back up. Again, we'll see this very often with the big players and oil companies, really attractive dividends. So a dividend safety of 65, a dividend yield of 6.16%, and an uninterrupted dividend streak of 32 plus years. So for us dividend investors, we love to see it. That's a really high dividend yield. You love to see that, man. 77% of these guys' earnings is in the upstream segment. And then 22% of their income comes from downstream. So that's their gasoline, their jet fuel, all of the stuff like that. But look, Chevron has lived through a lot these past few decades, you know. We can see that here. Many other oil and gas producers have come and gone during Chevron's time. Chevron has proven adept at managing costs. which right now in the world we live in, with the bad old virus that's going around, oil prices now being negative, that's going to be so incredibly important. The way I see it, so many of the small guys are going to go bankrupt. I don't see that happening to a company like Chevron. The next thing I want to have a look at is Chevron's current assets, which is at 28.3 million. Okay, and if we compare that to their current liabilities that are 26.5 million, that's amazing. So rarely right now do we see a company that can actually cover their current liabilities. This will make it a lot easier for them to survive, and that is why I love this company. I've had a few people asking me about these guys in particular, so if you want a full video on them, just let me know in the comments below. Now we have one that may actually surprise a few people. We're looking at Enterprise Products Partners. They're an MLP, a dividend safety of 65, a massive dividend yield of 11.41%, and an uninterrupted dividend streak of 21 plus years. What's nice to see is they remain one of the strongest MLPs as lower volume and contract default fears rise. This was from March 11th. Now, these aren't fears, these are realities, but they still remain one of the strongest. So what do these guys do? They have about 50,000 miles of natural gas liquids, crude oil, refined products, and petrochemical pipelines. So they process, store, transport oil for other people. They make most of its money from fees it charges customers for its transportation and storage services. And here's a graph that looks really complicated, but is quite simple, especially this first bit. Their natural gas and crude oil gets brought by trucks, barges, pipelines to storage. From storage, it then goes to crude oil refineries. Now, when I was initially looking into these guys, one thing that I really liked was this first line I see. The pipeline business has a number of appealing qualities. For one thing, constructing a pipeline can cost billions of dollars and take years to complete, resulting in high barriers for entry. So it's going to be hard for anybody to come, take over what they have. It would take a company billions of dollars and years to, set up a service that these guys already have readily available. This is what our 6-month stock chart looks like. And what's really sad is that where my mouse is hovering right now is where I decided to buy it. I got in right when things started to turn ugly. That's when I started investing. This was one of the first companies I picked up. It happens, I learned from it, blah, it's fine. I'm not too upset about it, but obviously I'm down an awful lot in this company. I think it's close to about 30%. It's my worst performing stock by far, but again, it's a lesson learned. I think that's the most important thing. And we have a look at the max stock chart, and we can see years and years of fast, consistent growth. We had this dip, and it's been very stagnant, and I don't expect this stock in particular to recover quickly whatsoever. I don't see a world where that happens. But what I do see is that when oil is booming again, which in my opinion it will at some stage, who knows when it's going to be, obviously when the economy opens back up, it's going to be months and months down the line, but when that happens, I think that EPD will see the benefits. Now, number 4, and a company I'm not currently in, but a lot of people have been asking me about this one, and I'll just say it from the start, I haven't looked into them anywhere near enough, but they're now on my watch list, and I am going to be doing a lot more research into them. But let's just go through what we initially see upon initial inspection. A 45 dividend safety score, not the best in the world, a dividend yield of 9.26, obviously very attractive, and an uninterrupted dividend streak of 14 years. This here is obviously the primary issue. When it comes to the dividend at the very least, they haven't been paying it near as long as a lot of the other guys. That's why the safety is only 45. Now, who knows, they could get through this, they could keep paying their dividend and would be very happy, but I wouldn't keep my hopes up. Look at the growth. Last 5 years, 0%. Last 20 years, 1%. So what do these guys actually do? Well, they're in over 70 countries. They explore and extract crude oil, natural gas, the usuals. They also own a number of refineries, distribution terminals, and LNG tankers. So again, a diversified company. Now, it should be known that 44% of their earnings do come from pretty much exploring and extracting natural gas, converting gas into LNG, and delivering LNG to end markets, which could, have a bad effect these next few months. Downstream, 29% of their earnings, they refine crude oil, and upstream, 26% of their earnings, they explore for and extract crude oil, natural gas, all of that good stuff. Non-USA regions generate over 75% of the firm's $388 billion of revenue in 2018. So even though things may be going really poor over in America right now, they're not going to feel the full effects of that. I mean, you see that today, they're up 5.73%. Now, I have had these guys on my watch list a lot, and I have noticed that they're a lot more volatile than your average oil stock. But let's just see just how hard they've been hit. We were trading above $27. They fell as low as $10.68 a share, and we're currently at $15.92, so nearly $16 a share. I remember looking at this max chart for the first time, and this was one of the big reasons I didn't take them too seriously. It's just messy. So obviously I need to do a lot more digging to figure out why it is so messy. That is exactly what I will do, and if I find some good information, as always, I will end up making a video on them. If I don't, I probably won't talk about them again. From their lows of about $10, they're back up over 50%. So you know what I mean, the rebound has been incredible. Me personally, I'm just not confident enough to invest yet. I'm really interested to hear from you guys who are in this company, because I know a lot of you are. You're always talking about it in the comments. Just let me know why. So guys, that's where I stand. The first 3 companies today, I could definitely see myself buying more shares in. They're companies I've already decided I want to buy. You guys actually drop a lot of knowledge in the comment section, and I always really appreciate it. I just want to say thanks so much for the support on the channel. It's mental to me how fast we're growing. It's so motivating, it really is. And now we're actually going to be making money off the videos. To me, mind blowing. But anyway guys, I hope that you enjoyed today's video. If you did, please leave it a like and subscribe, and I will see you all in the next one. Peace.